Good afternoon. I'm your host, Joanne Jobin with Vid Media, and today I am delighted to once again welcome Arizona Sonoran Copper Company. We're here today with CEO George Ogilvie and his team, who will update the audience on the company's progress since we last spoke, including the initial steps they have now taken to demonstrate operational readiness at the Cactus project, as well as corporate and developmental progress throughout 2025. Now, before we start, I do want to remind our audience that if you have any questions for the company, and I'm sure there will be many today, please place them in the Q&A tab at the very top near your chat sections. We will answer as many questions as possible at the end of the presentation. And now, George, without further ado, the stage is yours.
Yeah, thank you, Joanne, and thank you to everybody for joining us here today. On the call, I'm joined by Nick Cactus, the CFO and VP Finance. Nick Hayduk is also here, VP Corporate Development. I'll be joined by Bernie Lawyer, our Senior VP of Projects, Travis Snyder, VP of Sustainability, and Alison Doskin, Investor Relations Director, who will all be available at the end of the presentation to answer some of your questions and answers. So the presentation today is advancing the Cactus, a long-life, low-cost copper producer in Arizona. Thank you, Alison. We do make some forward-looking statements, so I'll draw your attention to those. This presentation is on our website, so please feel free to review it at your own discretion. As you all know, last October, November, we put out a pre-feasibility study to the market. It's a low-risk development project with 22 years of operational mine life in Arizona. We tried to simplify the business plan by focusing in on conventional mining methods and a simple heap leach with an SX-EW. We're on private land, so the state-led permitting, and we have a very strong social license. Within the company, you have a management team with a proven track record of delivering exceptional results for shareholders in prior companies. And obviously this year we've got some significant catalysts that'll further drive value with a feasibility study, permits, and project financing, allowing us to reach a final investment decision before the end of 2026. Of course, we led the PFS at a $4.25 copper price with a leading 2.3 billion NPV after tax and an IRR after tax of just under 23%. So a little bit on the share capital structure. Obviously, we've seen the share price appreciate significantly in the last 6 months. The market cap of the company today is around 1.1 billion Canadian dollars. We have 209 million shares issued and fully diluted 218 million. And the great news is that we entered the year with 105 million US dollars cash in the bank, which fully funds all of our plans, which we'll be sharing with you today throughout the entirety of 2026. There's 10 analysts that cover the company, and I believe the consensus price today is sitting around $6.60 amongst those 10 analysts. And we've continued to see a lot of great institutional support as our liquidity has improved, and also liquidity coming from retail shareholders as well. Thank you, Alison. What's great about this project, as you all know, is that the capital intensity or the upfront capital is extremely low. We can take advantage of the existing infrastructure in this area. We have access to water rights to the year 2070. There's a power line that runs right through the property with more than enough excess power on it for all of our business needs. We have access to rail, roads. We're in the heart of the industrial area within the city of Casa Grande in Pinal County. And of course, we've got a very strong social license. The last polling that we did approximately 18 months ago had 87% favorable rating to see the mine come back into production. Thank you. As well as the robust NPV and IRR, we have a payback of 5.3 years, initial capital of 977 million, and we generate in free cash flow over $7 billion over that 22-year mine life. Our reserves are sitting at 513 million tons of ore, which is 5.3 billion pounds of copper in the ground at a very healthy 0.52% overall grade and a 75% recovery. And you can see there in the top right hand of this slide, we'll be mining 2 open pits, predominantly focusing in on Park Salyer over the first 15 years of the mine life. And then as the production there winds down, we move over to Cactus West to take us through to year 20, and then an additional 2 years where we see additional material leaching from the ore pads. Thank you, Alison. Of course, as you all know, in the last several weeks, we've seen the copper price on COMEX and even the London Metal Exchange touch $6 a pound of copper. That's why we have that highlighted here. The NPV after tax at $6 is sitting at 4.7 billion, and we generate almost $12.5 billion US of unlevered after tax free cash flow at $6. The beautiful thing about this project is that when we look at $3.75, we still have good economics, and even at $3.75, we believe the project is absolutely financeable. So this is a project that is going to get built and will be in production over the course of the next 3 to 4 years. Thank you, Alison. So we've got some comparisons here. On the top right-hand side, you can see the Cactus project compared to some near-term copper development stories which are in the Americas with production in excess of 50,000 tons a year. You can see as far as the NPV is concerned, we're certainly at the top of the scale. As far as the initial capital expenditures are concerned, there's only one other project with a lower upfront capital. And when you look at the life of mine production and the rhomboids, you can see that we're in the upper third. Our NPV to CapEx sits at 2.41 times. So for every dollar of upfront capital, we generate 2.4 times. Generally, projects that are above 1-to-1 are considered good. And you can see that at 2.4-to-1, this is certainly leading edge. And remember, at $6 a pound of copper, it's over 4-to-1. Thank you, Alison. Again, another nice comparison here. We've seen a significant uplift in the share price. Our current market cap now in US dollars is around 880 million. But you can see there on the right-hand side, we'd be producing something close to 200 million pounds of copper a year. And when we look at some of the producers that are in those type of levels, we're looking, the valuations, enterprise values between sort of $4 and almost $10 billion. We're not suggesting in any way that we should get a producer multiple today, but certainly over the next 3 to 4 years, as we continue to execute this project and put it into commercial production, we would expect a significant uplift in the valuation over the next 3 to 4 years as we work our way through the Lassonde curve. Thank you, Alison. When this mine goes into production and we look at the top 10 producers today, we would be sitting at somewhere around number 4 or 5 within the United States. And of course, you can see that the others are all owned by many of the senior base metal producers. And of course, a significant advantage of this one is that it's copper cathode, which can be sold directly to US industry, US manufacturing. The product doesn't have to leave the United States for further smelting or refining. Thank you. So this is some of the main tasks that we'll be working through this year. We have some further slides beyond these where we'll delve into a little bit more detail. But I can tell you that we've started the APS engineering. That's the Arizona Power Service. The infill drilling obviously is continued on the back of the PFS. There's hydrological and condemnation drilling required this year, and we're currently preparing an operational readiness. I'm sure you all saw a press release several weeks ago where we had already obtained the dust permit. We're working on the additional permits, and we're well underway with the definitive feasibility study, which we see coming to the market the second half of this year. Nick will update us a little bit later on how the project financing is coming along, and we're also obviously paying attention to the ESG aspect, which is important for the commercial banks who'll be involved in the project financing. So all in all, that results in a final investment decision in the fourth quarter of this year. Thank you, Alison. So we're looking at some of the long lead procurement items. As I said earlier, the electrical switchgear on the site has to be moved, as does the transmission lines which are on the site. They're in the way for first mining activities, which are currently envisaged in 2027. So the Arizona Public Service currently is looking at the design and where we would move the substation and the transmission lines to coming in. We're also looking at completion of those critical path items if we follow the current schedule sometime in 2029. Because we're looking at operational readiness in the second half of this year, preparing for a big increase in manpower and activity in 2027, we are currently engaging at a preliminary level with various headhunters. We see some critical positions that would need to be filled within the company in the next sort of 3 to 9 months. And those would involve health and safety, human resources, administration, and procurement is another key area where we have to fill in that skill set. Thank you, Alison. We're currently engaged in an infill program, particularly targeting the first 2 to 2.5 years of the mine plan. We want to move the current indicated resource there into the measured category. This is important because when we come to do our next update of the mineral resource estimate, we'd like to declare reserves which are in the proven category. This will be important for the project debt lenders so that they have more confidence in the first couple of years of the mine plan, and that's why that infill drilling is currently underway. We're also targeting various geotechnical and hydrological holes, particularly around Park Salyer. There's a real opportunity there within the feasibility study to potentially steepening up the pit slope and the wall angles, which could help further reduce the strip ratio and allow us to access additional ore, which would help with the economics. And of course, now that we know where we're putting all of our main infrastructure, such as the leaching pad, the crushing area, the SXEW plant, the waste pads, etc., we have to do condemnation drilling there to ensure that there's no near surface mineralization, which we wouldn't want to sterilize. We also see an opportunity late this year to potentially go back to exploration. We'll show you later, there's some real exploration potential here in an area called the Gap Zone, which exists between Cactus West and Park Salyer, and then the northeast extension beyond Cactus East, where ASARCO did drill and hit mineralization many years ago, which really needs to be followed up upon. Thank you, Alison. So you're all aware that we got our dust permit in January of this year. The applications are well underway for the industrial air and the aquifer protection permit, and we'll be submitting those very shortly. We're updating our jurisdictional delineation survey, JDS, and we would expect to announce that in the second quarter of this year. And based on the land purchases that we made last year, there are 2 payments due this year, one to a consortium of vendors, which is $5 million in value, and the other one to an individual group, which would be $2 million, and that would satisfy the ownership of the 80 acres that we satisfied there. So these were land payments for essentially 2,100 acres of land, private land that we picked up last year, and further de-risking the project. And of course, along with that land, we'll be updating now the general plan arrangement, and applications for that will be going in imminently to the local municipality in Pinell County, looking for approval on that general plan arrangement. Thank you, Alison. So in addition to the work that we've already laid out, I'm sure you're very well aware that the definitive feasibility study is underway. We've engaged the same group of consultants that we've been working with over the last 2.5 years, which are led by M3 as the lead engineer. AGP will be looking after the mining and the mineral reserves. Clear Creek focusing on hydrology. ALS does the geology and mineral resources and ultimately reserves. Geologic is looking at the heap leach design and optimization. Col Nicholas is doing geotechnical work. And we have partners in performance, which are doing real-time modeling, optimization, and Monte Carlo simulations. There's also some other work to be done this year, particularly around the water. We have an abundance of water sitting on the fault below the mineralization, but there's additional work to be done around Park Celia, where we want to put in a dewatering well and also look at various monitoring wells ahead of the definitive feasibility study. Thank you, Alison. So here you can see a isometric view of Cactus West. The purple and the red represent the measured and indicated, and of course, some of this will be in the mine plan within the PFS. We really wanted to show here that there's a lot of inferred material sitting at depth that can certainly come into future opportunities and future plans. And of course, remember in the PFS, we did not include Cactus East, which previously was an underground operation. So we definitely see some opportunities over time to bring Cactus East back into the plan, either as an underground mine or potentially in a higher copper price environment above the $4.25 that we modeled. There's an opportunity to potentially consider that as an open pit at some future juncture down the line. Thank you, Alton. So here you can see our reserves against another suite of peer groups. You can see we've got about 2.2 million tons. That's the 5 billion pounds of copper actually sitting in the ground at a very healthy reserve grade of 0.52%. And I think you'll agree with me that from a grade perspective, we stack up very well against some other potential copper producers here in the Americas. Nick, do you want to jump in on this one?
Sure, George, and good afternoon, everyone. We just wanted to let everyone know that our financing process started in earnest last July. The management team had engaged 15 financial groups, including commercial banks, traditional project finance institutions, export credit agencies, and offtake providers. We received a very strong interest initially, and most of those groups are not only under NDA with the company, but are in advanced discussions with the organization. We're working with Hanneman Partners as our financial advisor out of the UK, and we continue to explore potential for government loans and grants. What allows us to be very optimistic about our prospects on the financing side are really driven by the economics. As George pointed out, the NPV to CapEx is 2.4 times. We have an extremely strong IRR at just over 22%. Robust cash flows of about $3.8 billion from years 1 to 10, and average free cash flows of approximately $582 million for the period years 4 to 10. And this is all done at a copper price of $4.25 and it's a long life asset. So all of those very conducive to project financing. Next slide, please. In terms of the economics and the drivers behind the valuation, you could see it in that chart right up above. We're going to be producing very significant cash flows very early on in the mine life. And you can see from years 4 to 14, we really start to generate significant cash in that period of time. We're estimating cash flows to be in the neighborhood of about 575 million annually over that period. But I think this is the important point. We also run those numbers at spot, and at spot, those annual cash flows are in excess of $900 million US annually for this project. So we believe this project will add a tremendous amount of value very early on and is conducive to a project financing. In terms of the net present value, and that's a big driver. We have $7.2 billion of free cash flows, and we generate very, very healthy margins. And this is the argument we've raised to all of our investors. If the pundits are right about where the copper price is going, clearly the Cactus mine in Arizona, Sonoran, will benefit from that. But the reality is that we are in a unique position to have this asset perform exceptionally well under current copper price conditions. And we believe that's an area where we compete favorably to our peers.
Thank you, Nick. From an ESG perspective, we touched on this earlier, but we do anticipate doing another poll later on in the year as we near the conclusion of the feasibility study. There's also an economic impact study which is underway right now, and I believe sometime in the early second quarter we'll be in a position to release the results of that. The last one was conducted several years ago based on the PEA in 2024. But at that time, we saw $15 billion of economic activity in Pinal County in the city of Casa Grande. There was over $3 billion going into wages and salaries. And over the 31-year mine life at that time, we were generating close to $1.2 billion of taxes, which were being paid to the local community, the municipality, and the state. And of course, since releasing that PEA, the PFS economics have only improved over a shorter period of time. So we probably would expect the economic impact to actually improve substantially when we release the next report. And the previous report basically said in layman's terms that it would be like bringing the Super Bowl to Pinal County every second year over the mine life. Thank you, Alison. So we've really been through this schedule on the other slides, but once we get to a final investment decision at the end of this year, with the project financing lined up and the permits in place, we would be at a final investment decision. And if the management and the board greenlights the project, we're still looking at an 18 to 24 month construction and development period. And we believe we could realize first copper cathode sometime in the second half of 2029, which, for a copper mine is a relatively short period of time for low capital and an extremely attractive capital intensity. Thank you, Alison. Obviously, we're delighted with the appreciation in the share price. I think if you go back a year, the validation that we saw from Hudbay in putting money into the company, and of course they've continued to put money in as we've raised monies throughout the last 12 months. I think being opportunistic in December and closing out a very successful, 86 million Canadian dollar financing has put us in a great position, as you saw, as far as the treasury, and it's further helped, support the share price. And getting the dust permit, within 2 months of filing the pre-feasibility study, hopefully has given the market even further confidence that on this project, given it's on private land, permitting is not really going to be a major challenge for us. And I believe the share price is going to continue to appreciate over the next 12 months as we continue to deliver on those key objectives and goals that we shared with you earlier. Thank you, Alison. If we look at the NPV of the project in the base case, and with an $850 million US market cap today, you can see that we still have $1.5 billion US gap to the current PFS. And if we run it at spot and we have an NPV at 4.7, you can see that delta or gap is actually sitting today at $4 billion US dollars. So as I referenced earlier, as we execute on the project, work our way through the Lassonde curve, get this thing into production and eventually commercial production, there's a massive re-rate here over the course of the next 2 to 3 years. And remember, this is copper cathode in the United States, which is a tier 1 jurisdiction and probably one of the safest jurisdictions in the world today. Thank you, Alison. Again, some further evaluation metrics versus our peers. We're trading at just over 0.5 times price to NAV. If we look at some other projects that are at PFS level, on average, we see them trading at 0.63 times price to NAV. And then if we work up to feasibility study, we're seeing in and around an average of about 0.7. Of course, I'm biased, but I would argue that given this is the United States, it's in Arizona, which is a very mining-friendly jurisdiction, particularly on private land, and it's copper cathode, I think there's an argument to be made that the company should be trading at a premium above its peers. And again, this is some further information that I think highlights that fact that, you know, if you go through most of these KPIs and you compare Arizona Sonoran to, you know, Arizona developers, American sort of developers, America's developers, and some producing companies, you can see that there's still an opportunity here for a further re-rate in the Arizona Sonoran stock. Thank you, Alison. So just to recap, this is a quality asset. It's a copper porphyry system. You've got a known management team with a proven track record. It's a tier 1 jurisdiction. I'm sure you would agree with me that the economics look extremely compelling at $4.25, and at spot, they look fantastic. It's a low-risk project given it's a brownfield site, known entity. It doesn't get any easier when it comes to mining than open pit mining. We're substantially permitted on private land, and we have and will maintain a very strong social license on this project. So that concludes the formal part of the presentation. Joanne, we're going to open up the floor now to take questions. Just before we do that, you're all aware that we put out a press release a month ago notifying the market that we were entering into negotiations with Newton on the option to JV agreement. We're deep into those negotiations, and subsequently we cannot answer any questions today on Newton and how those negotiations are proceeding. So hopefully you'll understand that, but everything else is on the floor, and we're happy to answer other questions that you have.
Thank you very much, George, for clarifying that. And thank you and your team for a fantastic update as usual. Now we have another full house of participants in the room today. So thank you to everyone for tuning in. And now we're going to take the questions from the audience. Again, it's a reminder to please place your Q&As in the tab located at the top near the chat section. I will remind everyone that, you know, we have answered many of the questions today in the presentation, or Alison has either answered you directly during the presentation or will be reaching out to you. So the first question of the day is, have the plans changed at all in light of the copper rally to $6 a pound?
Well, I can take that one. No, the plans haven't really changed at this juncture. You know, the first 20 years of the mine plan, I think, is a very, very solid base. And, you know, our strategy with the definitive feasibility study is to build off of that solid base and basically duplicate that over the first sort of 20 years of what we've already presented. You know, that gives us some consistency, some stability. we're already quite advanced with the project financing, so we're not, changing things around at the last minute with the lenders on the project. Once the project is financed and we green light it and we start moving it through construction and development and into production, certainly if we see a copper price at $6 a pound, obviously plans can change at that juncture in time. For example, there could be mineralization today that's uneconomical, but at $6 a pound, suddenly it's economical, and we can mine and we can make a profit and a margin on it. And we have to be opportunistic like that. And that's how most mines operate. But at the moment, we really want to be consistent and send a message to the market that the plans that we put out are what we're going to deliver on the feasibility study. And if we see $6 a pound, that's really going to be the gravy, the cherry on the cake for us.
Excellent. Thank you. Gold reserves. Are there any gold reserves? Casino has 14 million ounces of gold listed. Is copper your main commodity?
Maybe I'll ask Bernie to jump in there with respect to gold and some of the other minerals that are within the deposit.
Yeah, thanks, George. Certainly there are trace elements, but they just don't play a role at the percentage of occurrence that we're seeing, such that it has any remarkable impact on the economics. So, for instance, I think gold during the 10 years that ASARCO operated, because they were making concentrate, and so they got gold credits, was quite marginal. So we don't see gold playing any measurable impact in the economics.
Thank you very much. Which quarter in 2H? Let me see. I'm sorry, I've lost my Q&A. Here we go. Apologies. Which quarter in 2H 2026 do you anticipate the DFS? Q3 or Q4?
Bernie, maybe you can answer that one.
That's funny because that's a question that George asks all the time. So we're moving forward. We're about 7 weeks into it, and of course, one of the big mantras is to, if at all possible, to maintain a lot of comparison to the most recent study, which posted in November. So we don't see a lot of change there in terms of ultimately in terms of installed horsepower, footprint, things of that nature. But, we've given ourselves enough time, we believe, and we're comfortable with the second half. I would say relatively early in the second half, and that's about as far as I would want to commit in terms of timing.
Thank you. George, how's your cash balance? Do you have enough to execute on the 2026 work plan?
Maybe Nick, you might want to jump in there.
Sure. As we outlined in a previous press release, we started off the year with 105 million in cash. Quite frankly, it was more than what we needed. We already had sufficient cash to get us through the DFS cycle, but we decided to raise cash to strengthen our balance sheet and to give us some flexibility to look at potential early works opportunities, which we're evaluating at the current time.
Thank you, Nick. Another question. Could you start pre-stripping this year, George?
Bernie, do you want to jump in there?
I love that question. Well, we've got a number of things that are in the pipeline that we need to get done first. And it's not a current part of the base plan. But that doesn't mean we aren't examining the possibility. But again, we need to complete some early works procurement. That's a part of the budget. And the permitting that Travis is leading, the amendment process, will need to conclude, and then that initiates the very opportunity that this question sort of phrases. So the stage isn't fully set, but it's something that we're closely examining.
Thank you. And along the same vein, when do you anticipate being fully permitted?
Travis, do you want to jump in on that one?
Yeah, thank you, George. We're anticipating having permits in hand by the middle of the year.
Okay. Let's keep going on the operational side. What's your water source, and is it enough for your operations?
Bernie, do you want to jump in there?
Sure. Well, I mean, that's as represented in the most recent study, and the story sort of continues to develop from a positive perspective. But right now, it's all groundwater. Most of it, all of it, at least, factored into the water balance that's grandfathered and meets all of our process requirements by plus a factor of 20%. But there's other investigation that's ongoing, including dialogue with the local municipality in terms of the use of effluent.
Thank you. Let's go to a corporate question now. George, considering your current listings on the TSX and the OTCQX, would a U.S. exchange listing such as NYSE be pursued to broaden institutional investor access and liquidity?
Yeah, it's a great question. Nick Haydock, do you want to jump in there and give us some background on that?
Thanks, George. Obviously, we do look at the shareholder register. We look at the funds we're able to access through the current capital markets. And we try to prioritize that against I call it the driving business needs of the day. Right now, we're obviously in a position where we've been able to access capital through a TSX only listed vehicle. But as we advance the project towards larger capital needs, towards project financing, which Nick can separately speak to, there certainly is an opportunity to explore the capital markets in the United States through a U.S. listing to give us broader access to a pool of capital that we may need to access for purposes of building the project as it's currently contemplated.
Thank you, Nick. We have a vendor asking a question. As a vendor, who do we reach out to regarding dust control?
Well, I think Bernie's the Senior VP of Projects on site, so he would be the initial contact, and then he can direct your line of questioning to the appropriate person on site.
Thank you. And final question so far. What kind of dialogue do you have with the U.S. government with respect to financing potential?
Yeah, maybe Nick, if you want to jump in on that one.
Sure. We have been having initial discussions with the United States Export-Import Bank and the certain government agencies that are active in terms of offering grants and loans to projects like ourselves. We're in a very favorable spot given that we're producing a critical mineral in the U.S. for U.S. consumption. And it aligns nicely with some of the goals that the administration has in terms of moving projects like ours forward and assisting us with financing. And so consequently, we're having discussions with multiple parties at the moment, and we hope to update the market with more a kind of fulsome response as the year goes on.
Thank you, Nick. Let's talk about your community that you operate in. What type of programs and supports do you have in place for and with the local communities?
Travis, do you want to take this one?
Yeah, so we're actually very active within the community of Casa Grande in the greater area of Pinal County. We're active members of the Chamber of Commerce. We donate to many of the local schools. We have outreach programs. We have dialogues with the library and any needs that they have. Yeah, we're very active within the community.
And Travis, didn't last year we provide a grant to one of the universities for some of the up and coming engineering students?
Yes, thank you, George. That's actually a really good point. So we actually supported a scholarship program at Arizona State University for people that are seeking mining degrees. That will help support them in their development of their assay, or not their essay work.
Okay, thank you very much. And we have another question that just popped up. Early in the presentation, water was mentioned on bedrock. Is there any anticipation of water ingress issues or mediation?
Yeah, it's a great question. The water that we see on site principally comes from a fault system known as the basement fault. The good news for us is that the basement fault actually sits below the mineralization, so below the open pits that we're envisaging to mine. So we have this abundance of water which we can draw upon for processing, for core cutting, for dust delaying. But as long as we don't break through into the basement fault, we won't see that water egressing into or ingressing into the open pits. Throughout the various studies we've conducted today, we've drilled test wells and we see minimal water. But as we referenced earlier, as part of the feasibility study, we will be drilling some additional test wells around the site just to reconfirm that.
Okay, thank you, George. And we're almost at the top of the hour now, so we will end our Q&A session. George, I just want to say to you that the company, congratulations on the stock price from this, from last year to this year. It's just done amazing. Now, of course, the copper price has helped, but as well, your team has done an incredible job on execution. So congratulations to everyone.
Thank you, Joanna.
You've done an amazing job, and it's fantastic to have a super team and an A team with you. So again, we are at the top of the hour and we're going to end our town hall forum. George, do you have a few words for your shareholders and audience members who have joined us today?
Yeah, well, you stole a little bit of my thunder there, but I wanted to actually thank the Arizona Sonoran employees and staff and senior management team. I think 2025 was a very exceptional year for us. And if you go back a year ago, when we were talking about all our plans and objectives and goals, and you look at what we actually achieved, I think we actually knocked it out the park. It was a real home run. Of course, we're getting the advantage now of the tailwinds coming from what's happening in the general copper market as, supply gets squeezed and demand continues to exponentially rise. And I think it bodes well, Joanne, for our shareholders and any potential shareholders that when they look at the trajectory of this company up until now and look at the potential trajectory over the next 3 to 4 years, I believe we can continue that forward momentum just by delivering on our objectives that we've set forward here over the next several years. So there's a lot more upside in the share price valuation, and I expect our team to continue to deliver, and that's going to be great news for the shareholders of the company. And thank you once again, everybody, for your very valuable time here and dialing in for Arizona Sonoran Copper Company. Thank you.
Thank you, George. And thank you to everyone who joined us here today. Just a reminder to please fill out the quick questionnaire before logging off. This really helps us and the company to communicate more effectively with you. Just a reminder as well that this presentation will be available on the company's website and across all of the VID social media platforms within the next 24 hours. Give us a little time to edit, please. Should you have any further questions for the company, you may email them directly to Allison Dwoskin at adwoskin@arizonasonoran.com. Thanks to everyone who joined us today, and we look forward to seeing you on the next VID Town Hall Forum. Goodbye, everyone.